Hi everyone, if you've ever wondered if Afterpay and other buy now pay later loans are good for you, you must tune in to this video. I'm Marissa, I'm here with Amanda, we're from Rise High Financial Solutions. Today we're talking about payday loans, buy now pay later, things like Afterpay, and we're going to explore if they're good or if they're bad and everything you need to know and what you need to watch out for. So Amanda, can you please start by telling us what are these payday short-term loans? What are they all about?
So payday loans are short-term. They're usually due in weeks or months. They're very easy to access. They're unsecured. Usually their high interest rates are disguised as fees and you receive the payment in advance. It's a very tempting quick fix, but how much is that quick fix really costing you?
Yeah, I mean, it's so easy to access this form of finance, so people don't really think about the consequences when they're accessing it. So what can go wrong with these types of loans and why should people be aware?
So there's very little affordability assessment and fewer checks and balances. So it puts the responsibility back on the client to make sure that they can afford it.
So what does that actually mean though? Because I guess, in the home loan lending space, we have to do a lot of checks and balances, but what's the risk to the borrower if in these situations they don't have to go through that assessment?
Yeah, so you could get yourself in a situation where you're not able to repay these loans because it hasn't looked into your financial position. So what happens is you can end up borrowing more money to pay back these loans when you find out that you can't repay them.
Because effectively it's putting the obligation back onto you as the borrower to decide if you can afford this loan. And some people aren't necessarily able to determine that as well as maybe they should. And we find a lot of people end up in they can get trapped in a cycle of debt.
Yes, that's right.
So, is that something that you've seen, and what do you see happening in this cycle of debt with these types of loans?
Yeah, so sometimes people will then put their Afterpay back on their credit card and then you'll be paying interest on your credit card, or these type of payday loans expect you to pay late, and that's how they make their money. They charge higher interest rates and late payment fees when you can't repay those on time.
Yeah, that's the thing. They advertise that they've got zero interest, but the fees are so substantial, and they're disguised. It's actually an interest rate that's disguised as fees, and they just charge so much in fees. So, what's an example of the types of fees that people could expect with these types of loans?
So sometimes there's an establishment fee which can be higher, or a monthly fee, and that can just put you in a difficult position later on because you think you can afford these fortnightly or monthly payments, and then if you default you can sometimes end up being charged a lot more.
And my understanding is that if you default, sometimes you can end up having to pay back double what you actually borrowed, which is a massive interest rate. So it's a really big problem. I mean, when I look at some of the stats, it does concern me. When Financial Counselling Australia recently released a report, and they said 84% of people in financial hardship are actually resulting from these payday short-term loans. ASIC also released a report saying that more than half of their users are spending money that they wouldn't otherwise spend. So some of these things like Afterpay, for example, are encouraging people to spend money they don't have.
That's right.
What do you see as the risk in that?
The risk is you just go out and buy what you don't actually need. You have no foresight into what's going to happen next fortnight or next month and how much you're going to actually end up owing, and that puts you in the position where you're behind on your other repayments and your Afterpay payments.
Yeah. I mean, in the last few years, we've become very familiar with a term called Afterpay.
Yes.
It's at most shops that you go to these days. I don't know that everyone really understands what Afterpay is or how it works. Can you give us a little bit more information about Afterpay and what Afterpay actually is?
So with Afterpay, you can make a purchase, and generally you can pay that back with 4 fortnightly repayments, and that you might spend $200, but you're paying $50 this fortnight and $50 for the 3 fortnights after that.
And if you're late in your payments for Afterpay, what can that set you back?
Yeah, you can receive late payment fees of up to 25%, which is quite a high interest rate compared to other
Absolutely,
lenders.
that's where you can see that it's easy for people to get trapped into this debt cycle. So as a mortgage broker, do things like Afterpay and other short-term buy now, pay later type loans, do they affect your ability to borrow money for a home or for a car or for a personal loan? How do they affect your borrowing capacity from your perspective?
So payday loan inquiries can have a negative impact on your credit score, and many people who access the payday loans are in financial hardship. So that puts the assumption to the lenders that you're in a tight financial position, and it can reduce the ability for you to get a home loan.
So that's a really interesting point, because just by you might not be in a financial hardship, you might be very sensible with your Afterpay purchases and your buy now, pay later, but just the very nature that you've got them is an automatic assumption to the lender that you can't manage your cash flow on a day-to-day basis. So it does reduce your ability to get a loan, doesn't it?
It does. Every credit facility that you have open does affect your borrowing capacity and your ability to borrow.
And I think one thing that people don't understand is that if you do take out these types of facilities and you are late on making the repayments, these can impact you for years after the situation. So for up to 2 years after that, being late or having that problem with that finance facility, it can still be limiting your ability to get finance for other things in the future. So lots to look out for.
Yeah, so just keep that in mind. If you're looking to get a home loan, just clean up your spending and make sure that you're paying your repayments on time.
So I guess just to sum up, buy now, pay later loans and things like Afterpay can be okay if you're really smart and you use them really carefully, but you do need to be careful to make sure that you can always meet your repayments when they fall due, and that you don't fall into the trap of paying late or paying debt with more debt. So that's all we've got time for today. We're always here to help you. The team at Rise High would love to help you. So if you've got any questions, anything we can help you with, please get in touch today. We'll see you next time. Thanks and have a great day.
Thanks,
Bye.
bye.